Hello everyone, welcome to today's session. Let's jump right into it, talk about current market conditions. We'll go back to directional alerts here, and we'll look a little bit of the top-down approach, looking to see what the overall uptrend is. We know that we're in this bull market. We've been working towards the upper range of this bull market now, and possibilities for some retracement. We've been working on that retracement. We'll look a little bit closer at that chart as well. And we're seeing, this overall topping pattern, or at least this extreme level on this trend, and it's starting to flatten out a little bit here, and we'll look at this reversal. But we've got the bearish in a bull market, which is essentially focused on the bull market being this long-term trend, and then the bearish part of that looking for this retracement. I'm going to skip all the way down here to the momentum indicator, because that's really the one of most interest at this point, where we're now looking at this extreme area. We've notched all the way down to the bottom of that indicator, and then also breadth we're seeing at 33, which is essentially 33% of the overall stocks in the database are trending up, which means the vast majority, 75%, 76% are trending lower. So that's definitely not bullish, and it's going to be tougher and tougher to get a rally out of this, but we'll look at that chart pattern here now. Buy-sell ratio is also starting to, we've had a pretty sharp move from this bottom to this peak. We're now up in this upper range where we could get a reversal back down and then chop around right here. So I'm anticipating quite a bit of chop, quite a bit of volatility. Sentiment is sitting right down here at the bottom. And if we look at SPY, we've got two things happening on SPY. One is when I've included the snap tool right here, where it's connecting the swing high point and the swing low point of our 6-month trend, and we've retraced, and typically we want to see that overall momentum zone sticking above that top level, which is the 236 level, and it hasn't done that. In fact, you'll notice now how it broke through that, and then as of today, you can see that black bar is curling over. If I turn off the signals and just go to a candlestick chart, the black bar inside of that signal is just a down day. It's a red day, so it's a little bit easier to see. If you go like that and then say, okay, it's a red day, but it's a down red day, versus over here on the uptrending signals, it's an uptrend, but it's a down day inside of that uptrend. So when you're seeing these charts and the setting is on signals, that's all that's telling you, so that you can see within the overall uptrend that we're having some down days along the way here, like each of these. Here you can see one, and here you can see one, and then that one right there was a big reversal bar. That's actually held up to be the top so far, which was really a nice reversal pattern, a reversal bar. So we're seeing that bouncing now to where the support, which should have been the floor, has now become resistance, and we're counter trending back up. And we'll see if we continue this downward slide. What time we got a couple more hours of market open, and see if we end up retesting back down to this low. That's looking like it's at least as of this resistance area, we're going to continue to run into resistance on these counter trends, and that's our trend direction now. At least in the short term, we're looking for this stair-step move to come back down to that 429, and if it holds and then moves back up, and then ultimately, if it rallies back up, great. But as of now, it's not. As of now, it's finding resistance, and so the game that we want to be focusing on now is right here inside of this range. Okay, this is really all we have to be concerned about at this point. And if we continue to slide and it continues to move back down, and we do start to retest this area, then we'll reevaluate there, right? And say, well, let's look for a nice bounce at support, a good bullish up day, a good confirmation day. And if we switch this over and we move it back to candles, and you can see, if we were to have a support area and then we're getting a bounce and we have a bar that looks like that, or a bar that looks like that, and that's just not happening yet. So we've got the probabilities of more downside are are increasing, particularly if this bar closes like that today. If we end up getting that reversal right at that point, then we'll watch to see if we just continue to slide down to that 382 level, which is also really close to this other support location. And we're down, we got to the extreme range a couple days ago. We've now moved back up out of the extreme range, and we're getting close to that. And that's typically what that extreme range does, is it just pulls an extreme trending move back into a sustainable trending move. So this trend is down. We've now just gone from the extreme back up into a sustainable trending move, and then we should see, or could see, some continued downside because we're back inside of this trend, and we're still in this long-term uptrend on SPY, which is essentially that bull market. And so everything every pullback, we've got to be watching for bounces to be taking place. Now, as it's continually bearish, as I've mentioned in the past, the market conditions are simply a way for us to determine how to position our risk or to allocate our assets. So when we're at the top of a trend and maybe it's the market is extreme to the upside, then we've got to be starting to consider exiting, or at least paying attention to what the market is doing. And right now we're trending lower, the risk is increasing, and we've got to manage our risk. In order to do that, it's essentially shave some size off the positions, exit your losers if you're seeing some losers, because those losers, they can accelerate to the downside pretty quickly. You're getting potential for the baby in the bathwater, where everything's getting thrown out. So you may have stocks that are good, and it really depends on how you're positioning your overall portfolio. If they're longer term holdings and you're fine with the retracement and you're fine holding them for the next 10 years, and anything pulling back you're looking to buy into, that's an entirely different methodology versus a little bit shorter term strategy. It still doesn't feel good. It still hurts when we're dealing with any kind of volatility and losses. So simply reevaluating the plan, or looking at your plan and saying, what am I trying to do? What are my goals here? And what's my time frame? What's my risk level? What do I need for cash right now? What do I need for growth right now? What do I need for income right now? All of those different factors have got to play in terms of how you're allocating into and out of your stock portfolio. A couple of other charts that I want to focus on here. One on the index tab, the market ETFs. This is an interesting one also, because you've got everything except for volatility, which is VIXY, which is in an uptrend. So also we're seeing massive across the board downtrends on everything, on every market that's in there, even and especially the bonds. We talked about those last week. We'll go in and we'll touch on each of these as well. Let's look at NASDAQ here first. NASDAQ has a very similar price pattern as S&P 500, where we're in this downtrend, finding some resistance now at this support range, and be watching to see if we continue to slide. We found a little bit of support right here. So there may be an intermediate term on the NASDAQ if it holds. If we get a reversal right here and we move back to the upside, and this actually ends up holding, then we could see a potential for more upside right here. So NASDAQ actually is interesting, a little more possible bullish price activity depending on how we close today. If we rally, if we bounce and rally, or if we continue to fade and head things lower, we'll watch to see on NASDAQ. So we're getting really bearish confirmation across all of the indices. S&P 500, we looked at that one. Russell, the Russell 1000, let's see how that one looks. That one also sliding just underneath that resistance area level now. And then Dow had some pretty aggressive selling the last couple days ago. During this downturn, it didn't get the rally that S&P and NASDAQ did, and so it's looking like that 340 level is coming into play. Everything is starting to weaken. It's definitely an area of caution. If we were to even just take this trend right here from these 2 points, we're starting to break support, we're starting to break trend lines. This is on Dow, so this could be, we could continue to see this happening, an acceleration to the downside until it stops, right? Until it bounces and finds some support. But the overall strategy is to focus on watching for that longer term uptrend and seeing where we're going to get some support. This area on the Dow is very significant right here because of how many points of contact it's had, and really this entire zone right here. If I were to just widen that down into these points as well, these are all levels where the Dow had run into resistance, and then broke through it, and now it's breaking back down underneath it. That's pretty bearish for the Dow here as well. So really not a lot of positive to look at, even that it's not a super clean trend line, but things are getting broken to the downside, and it could be very, very early in more downside. So I think that's one of the values of, you know, analyzing the market each day is it's easy to look back at a chart and say, oh yeah, I should have been doing something right here, or, you know, I should have been doing something back even further. These are the areas where you're saying that, yeah, you know, when things are sliding and dropping, I should have been doing this. That can work against us sometimes, particularly if we find some support and bounce and start to move higher. That's why we don't necessarily want to be doing everything all at once with one strategy, saying, oh, I'm out of stocks entirely, unless you're you know, trading maybe an ETF or something in that regard where you easily can maneuver in and out of the market. Then that might make a little bit more sense. But we're oversold to the downside. We've moved out of the extreme range, and now we're starting to continue to see there's some potential support here on this 1 year chart with this swing low and this swing high, and that 340 level there. In fact, let me go back to that 6 month and see. Yeah, it's this one also, that 340 range. So both of those are really confirming that 1 year and 3 year time frame. It's snapping to those trends, and on the Dow is looking pretty bearish right here. Really everything is. Let's go and look at bonds, because that's the biggest concern right here, is as bonds are continuing to slide, interest rates are going higher, and as the Fed's going to start dealing with that, they may have to either pause or even change their tone or even raise interest rates again. And then we also know the real big picture, it's why I include on the side, is this bond yield curve, because it's that really is going to help us see and maybe forecast a little bit what's on the Fed's mind. Because they have to watch the bond market as well. The bond market is saying that the Fed's got to keep rates high, and so it's an interesting chart pattern to be looking at. Sentiment, so oversold, little counter trend rally. We'll see if we continue to slide to the downside. The other one that I wanted to look at was under sectors, under sector ETFs, and then looking here to see, we talked about energy. We know that energy is in this uptrend, and this is a bullish pattern in terms of trend momentum. Is we want to see it, these 2 points connected, and then we want to see it stay above this range. And as it's retracing and pulling back and continuing higher, maybe even making new highs, and then retracing, moving higher, that typically will happen inside this upper range when you have this Fibonacci connection tool right here. The snap tool is what we call it, because it'll automatically connect the high point and the low point. So if you're in an uptrend, it's going to show you that this is the low point, this is the high point. If we're in a downtrend, like just lost my train of thought. Oh, like bonds, you can see it's connecting the other direction. So it's snapping to the high point and the lowest point on the trend. So now I can quickly eyeball it and say, yeah, we're in a downtrend. This, as I mentioned before, this is not a trend line. It's just connecting those 2 points. But we obviously know that within this time frame, our trend is down, and any counter trends back up, as long as it stays inside of this zone, it can move back up and tracing back down. But this entire move, this entire location is the momentum location, and that is where, so we definitely have bonds in a momentum trend down. We'll see if we get any kind of a bounce here. a little bit of a move here today. That's a start, right? It's a start to see if we end up getting a pop higher on bonds. Let me go back to that sectors and let's take a look at through some of those as well to see really what's sliding. Real estate, we talked about that, where real estate is really getting beat up here. Just in the last, this month alone, just in August, you see that big topping pattern immediately continuing down, sliced right through that first level, and then did get stuck in this zone for a little bit of time, really tried hard, and then broke through the next one fast and is now attempting a little bit of a support level around this zone as well. If that can't hold up, it's probably going to be another quick trip back down to these lows. So definitely not a bullish chart as well. Trends are just, the markets may, they may get unraveled here, and that is these are definitely the early signs of how it looks before fear really takes over. As markets rally and then they retrace the gap higher and we're moving back down again. I don't think that we've seen any kind of real fear enter the market on this retracement quite yet. And it may not happen. It may be very orderly, but typically that happens. We typically swing too fast on market uptrends and market downtrends as well. But this month so far has just been horrendous across the board for sectors as well. Commodities. So we know that energy is moving higher, and then we talked about oil. So USO. So in terms of an uptrend in oil, this is the time frame on that 6-month chart where it's rallied, it's retraced back down, it's still inside this momentum zone, and it's holding support and kind of chopping around right here. So we'll see if oil continues to hold. This is USO, which is the ETF for crude oil, and still, it's bouncing around here, has some volatility, but it's had a big rally. We'll see on this 1-year chart. It's got that uptrend. If we pull in that 1-year chart, because it has had a pretty long retracement to the downside, then we're seeing that also happening right here. We'll see if it starts to break out of that zone. So here's that uptrend, some support. It's kind of broken out of these areas. If I draw that line across here like that, you can see now we're sitting on top of that support as well. That could be another driver as we see, we're worried about inflation, we're worried about prices going higher, worried about commodities going higher, worried about everything going higher. USO, if oil and crude move higher, that becomes a major issue for companies and cost control and consumers as well. I've mentioned this in other classes. I hate when gas goes up because I drive a truck, and when it costs me $90 to fill up my truck versus 60, then I start to feel that, and it's uncomfortable. I think that we all are in that boat where an extra $30 every 2 weeks or every week, depending on how much you're driving, it definitely starts to add up, and that's creeping back into the market here with USO. So sectors, indices, and the overall market as a whole definitely on us continuing to slide this downtrend. Watch on SPY how it closes out today, and see if we do continue to this 429 range on SPY. That could start to find some support again if we go out a little bit more. Let's go out a year on this one. There's a 236 bounce, and then the 2-year. Same story here. So this is interesting looking at this 2-year chart, because look what the snap tool did. It took me to a bearish trend because it's still connecting. It's still considering this the trending move on the 2-year time frame. And so now a set back all the way, moving back up this direction to a 786 retracement. That's really the last one. There's one other level that's about here. And then obviously if we went all the way to 100%, and I can add those in here. If I just go here and I add the 886 and the 100%, you can see it adds those other ranges. 100% retracement just means that it's all the way back to where it started, and so it's hitting resistance there. So it'll be interesting to see if this actually turns out to be the new trending move, and this entire move that we've had is counter trend, and this is now beginning an additional downtrend. That's not going to be fun. I've read some pretty nasty perspectives, and I don't love to read perma-bears too often, because sometimes it does, plays with your mind a little bit when you start thinking doomsday and you start thinking, great depression and the worst of the worst. That's easy. At least it's easy for me to start thinking that way. But we've got to, it's a possibility. It's a possibility that this is the actual downtrend and that we're now moving the other direction. And so this is it's relatively early in that. But there's a lot of support. There's some support coming up that's going to be a major factor, and that is right here. Okay, that next move down, that's that 429. So the 429 on the 2-year, the 429 on the 1-year, 433, and then the 429 on the 6-month. So one more move down to that 429. I think we'll see some significant support there if we slide into that may be a tradable bounce back up the other direction. But then that's going to be a really critical rally back the other direction as well to see if it becomes counter trend. Okay, if I were to take this and highlight that move, and we're looking now the other direction, then wherever we bottom out, I think I left one day off of there. Let me slide that over. So there's today. So if we were to have just on this current trend, obviously it's down, but really it could retrace back up into this zone, this 50% 618 zone. And if it does, if we sell off and we rally back up into this area, and then we start to see more downside, that could be really the big signal to be watching for more bearishness to come. So there's still, there's a little bit of hope still that we're not going to turn over and slide, but with another down 2 or 3 days and then a rally and a counter trend back up, we could see momentum accelerate to the downside. Just that's my perspective. That's kind of what the price activity at least is telling me. That's all I can do is analyze the price activity and try and read what is happening currently versus interjecting what I think should be happening or what I think is happening or what I want to have happen. It's more about what is happening, and we don't even have to place the why on that. Why is it happening? Because who knows? We'll know in the next 6 months why it's happening now, because that's the market is doing. The market is looking out 6 months and saying, what do we think is coming? Because we're going to start adjusting portfolios, buying and selling based on what we think is coming versus what is happening right now. Because what is happening right now isn't that bad, right? The interest rates being high, the inverted yield curve, the slowing, the earnings, the tech bubble, the new tech bubble, which really took off based on AI and may not be sustainable, at least in the short term, could be all of that could come could be the reasoning, in addition to recession. That inverted yield curve, I think we're 12 months. Typically it's about 15 months from an inversion to recession. So I think the market's also considering recession here as well. So keep your eye on stocks, keep your powder dry, so to speak, raising cash levels at these levels and creating opportunities in the future. This run up is exhausting itself, and it really was a weird run up. And what I mean by that was the one thing that really had me baffled during most of this was the buy sell ratio. The buy sell ratio during this run up right here was as weird, as sloppy and shallow as I have seen it in a long time. And so there just wasn't a lot of conviction. This is what typical trending conviction looks like. And this was just really quiet. Yes, we were moving higher, but breadth was not, there wasn't a ton of breadth included in that either. And we just didn't get a lot of really high swings to the upside or to the downside. Not a lot of participation in that rally. We'll see if that ends up being a little bit of a clue as well. Again, it's going to be 2020 hindsight. It's going to be after the fact. But when you see slight anomalies in an indicator that you follow all the time, then you've got to be paying attention to it and saying, there's something there. I don't know exactly what that means, other than the fact that there wasn't as much participation in the upside as there typically is, and that could be an indication that it's a counter trend. It's like we talked about, that the market's moving against that bear market now, but that we're ultimately still in it and going to accelerate that to the downside. That's not fun to talk about, but the reality is this is where we're at now. We are sliding, and that could, especially if we get another move up, if we go counter trend here, if it moves here or here and then here, that move back to the upside and then another push lower, that typically is that wave, either wave 3 or wave 3 C, okay, where you have A, B, and C, or 1, 2, and 3, either one of those, depending on how you label that. If you're utilizing Elliott wave type of context, could be some more bearishness to come. Let me just touch on a couple of other things here in terms of markets. That's really the big picture. Those are all really big picture. Shorter term picture is certainly what is happening in this retracement and where are the levels that we need to be aware of. This is one I was watching close, is were we going to get a retracement in this zone either today or tomorrow over the next couple of days, and we are. So that could be a solidification that this trend is continuing to slide, and it's also sitting right on that trend line, right at some resistance levels. As I mentioned earlier, there's lots of things that are starting to break down on this, but that's actually going to do it for today's session, and we'll finish on that note. I appreciate your time and effort, and we'll see you on Thursday. Thanks, everyone. Bye now.